you are the guy that successfully mines the block,
Yeah.
that still could be $1 million plus. And so you could potentially cover all of your overhead of running your miners from one successful mining uh, reward in the entire year.
Now answer me this. Are miners already gaining transaction fees, like doubling as a node?
Yes, that they
So
already
when you
do.
mine, in theory, you're mining for a block, but what you're actually doing is writing to the blocks also.
Yeah, you're solving the computational problem to ensure that the next block is created and that the information in that next block is proper. So it's just like validating, but it's a proof of work rather than a proof of stake. It's slightly different in terms of exactly how the consensus mechanism works, and I'm not a perfect expert on the exact differences in that mechanism, but essentially miners and validators have very little difference other than that miners require you don't require you to already hold X Bitcoin,
Mm.
whereas validators do. Um,
You just have to show up with the hardware.
yeah, you just have to show up with the hardware. Whereas,
Jackie, what blockchain are you most versed in?
Ethereum, probably.
Yeah.
I mean,
I don't know, like,
I don't know that I'd go so far as to say I'm an ETH maxi, but
oh,
um,
are you a maxi
I
of
like
anything?
no,
Uh,
not at all. But I use
that's maybe why
Ethereum the
Grant
most.
likes you. That's
I
maybe
think I'm
why
a
you're
little,
allowed on the show.
yeah,
I
I'm not a
agree.
maxi of anything because I think everything's messed up. um, I have no faith in anything. But I was gonna
Oh.
say, like, I'm a little like bougie about NFTs and stuff. Even that, I'm always like, is this Ethereum? Like I never got on the Polygon train, Avalanche. I was like, whatever. Like, I'll experiment and like mess around, but I think the most serious players in the long-standing, future is Bitcoin and Ethereum for different
Yeah.
reasons. But yeah, that's why I mainly stick to ETH.
Well, and Aussie, I hear you. Like, there's not much difference between a validator and a miner. And one is proof of work, the other is proof of stake. When you have a proof of stake, you buy in, so you basically have staked 30 ETH, right?
32. Yeah.
32 ETH. You've staked the 32 ETH. You now have permission from whoever, the foundation, to basically inscript the next block or validate the blockchain. And really, you don't even inscript, it just basically validates. And if there's 30 nodes out there, now there's 31 because you're there. And now there's 31 validators that say, yes, this is a valid transaction. And then the blockchain is even more solid. And someone else has a power outage in Pakistan, and that's redundancy to the network. But you're saying miners in Bitcoin are similar in that. But with proof of work, isn't there like this huge front load that has to occur in the computation?
Yeah. So in proof of work, they are doing computation. The miners are doing computation to prove the equation's correct.
Mm-hmm.
And so that is a major difference. But they also don't have the upfront of having to own Bitcoin or own ETH
Mm-hmm.
to participate. They just need to own the hardware, which was originally just GPUs, old GPUs that you would mine Bitcoin on, and you could mine ETH on when ETH was proof of work.
Mm.
So, like, yes, as it's scaled up, the tech requirements are higher, but it doesn't necessarily mean that some of the chain differences are nearly as, I guess, large as a lot of people like to make them out to be.
I guess to me, the business model is what. Go ahead, Jackie. What was your thought there? You had a thought.
I mean, I was just going to say from like a macro level, we're moving from centralization to decentralization. And from a business model perspective, like the whole point of this is that you're spreading the surface area of energy, the surface area of bit operations, essentially. So while there's differences in proof of work and proof of stake in how they do what they're doing, essentially at the end of the day, it's beneficial to have more things involved in more places. Like before we got on here, we were just saying that, the good part of having more validators in a proof of stake system is that you're going to lower transaction fees, gas fees. The network's going to be cheaper to actually use. So
Yeah. And that's true of both the financial model of both blockchains. But I'm thinking like at the actual business owner level, like for me to go get a loan or finance my own Ethereum node as a business owner, just thinking from the income model versus, say, for example, we can say now Jarrett's working at Compass, right? He's working at that mining company, Compass, and that company either had to put investors together or put their own money together. And Bitcoin seems like to get into the Bitcoin mining / validator model, I just have to come with the hardware. That's fine, but you're still in it for about what you're in it for an Ethereum node, hardware wise and cooling.
At minimum, yeah, depending on what scale you're going for.
But
Yeah.
also to your point, like you said this before we came on, like, but you can assume Bitcoin's going to be at 100,000, a million, and so like one mined block a year would pay for your costs, and I agree with that. But that is contingent. That business model is largely contingent on a speculative play, whereas Ethereum, you do the maths on transaction fees, and you go, do I have a sustainable business model immediately? Am I understanding that correctly or incorrectly?
So, I mean, yes and no, because you could argue that Ethereum, you're still dependent on transaction fees. The percentage that you're making is still dependent on transaction fees. And so to think about whether or not you've got a sustainable business model, you've got to anticipate that there's going to be continued transactions on Ethereum, that Ethereum price will sustain itself, that that Ethereum that there's not going to be an overload of validators on the network, which drive down how much you're making per transaction. And so I would say the business model between miners and validators is exactly equal, because you can also game like just like you can game your swing on when Ethereum might go up. With miners, the price of miners fluctuate massively with the price of Bitcoin. So you could buy Bitcoin miners right now for that are more powerful for much cheaper than you could buy them at the top of the last bull run.
I would
Like
keep going on.
over 50% cheaper.
I would say too, like, I don't know if you guys have gotten to like go to any mining operations or like talk to miners, like hardcore, like people that are really doing it. I have been fortunate in that area. And I mean, there's so much unseen stuff you don't even know about mining. Like, literally the grid can tell you like you can't mine during these hours because you're overtaxing the grid. Like you have to shut down. And so, I mean, I even know guys that have paid, a certain amount of money for energy, and then they're told to shut down, and then the provider is going and selling that energy at a different price. So like they just funded that sale, right? And then even beyond that, and this is why I don't want anyone to track me down and kill me for saying this, but this is
which is at least
why,
once per show we say something.
I don't mean, yeah, but I mean, this is also why I always thought proof of stake. I thought the whole debate of whether something was a commodity or a security was going to come down to whether it was proof of work or proof of stake. And I always thought that was because proof of work, there is so much other stuff going on in the background of what's making that all go. And like Aussie's, I mean, to the point, again, not financial advice, but in my mind, Bitcoin has to go full institution. Bitcoin has to be at this, $100,000, $150, whatever it's going to be worth, to kind of make all of this tokenization a world, a thing, I guess we'll say. But there's more speculation for all the reasons Aussie outlined earlier with Ethereum. how many people are using that network, how much stuff's being built, how much, like that actually runs more like a business
Yeah.
than like Bitcoin running like a commodity.
That's interesting. Well, and that's the thing. So, like, and maybe Aussie, the economics of what you're talking are equal. And my brain, and mind you, like, I'm just literally speaking like off the cuff. The more I ponder, and I haven't put anything down on paper, and I really should. The business models, even if they're like economically about the same in terms of cash on cash investment for a single year, there are still these other things that could come to bite you around tax season, or adoption by institution could disrupt you. Go ahead, Oz.
Oh, there's massive tax implications with ETH staking. You can get taxed on when you earn the staked ETH,
Mm-hmm.
and then when you sell the staked ETH. That is a huge thing in the US. And if you're most people, if you're mining, you're either mining in Tejas, Arizona, or not in the US.
Did you
Most
say
likely,
Tejas for Texas? What
yes. I just like Jared. Come on, Tejas.
Sure, as a Latin, it tends to make sense. You as a Canadian, I was like, wait, I had to process that. Wait, there's a place in
I thought
Arizona.
there was a place in Arizona called
That's
Tejas.
a.
I was like, I haven't
It's like the
heard.
Bitcoin mining hub of the world we never knew about. No, I think the independent republic of Texas got it. I gotcha. That is interesting. And which of these are most likely? I think you're right, Jackie. I think for Bitcoin for when Bitcoin maxis wave the flag and tell me the vision of the future, I think you're right. Governments will have to adopt it and take it under their purview and regulate it, and like it will be the adopted de facto. Kind of like the Federal Reserve is under government purview, but technically private. I think you'll see like that sort of architecture around very tight regulation of miners at that point, which I'm fine with. And honestly, the longer we go, the less pushback I hear from Bitcoin maxis. They kind of like go, maybe, but they just want to see the vision manifested large because they're holding bags.
No,
And
yeah.
they're like, please let my bags go. But like for me, when I think about Ethereum, I do agree with you, Aussie. Like your ROI is based on a fluctuating Ethereum price, but we're already in that price now. And like if I can create a viable business model now at a near low of the market, and maybe it'll dip further, and I incorporate, let's say, a 25 or 30% margin for it to tank even further. But if I put together a Bitcoin mining facility and have the same investment, but I'm telling myself, yeah, if and when Bitcoin hits 100K, there's a huge jump there.
Oh, I've got my friend. We've talked about this. My friend set up a mining facility in Paraguay.
Yeah.
We were looking at 10 or 20% returns on the Bitcoin at 22,000.
Oh. All right. It's interesting.
Like that because he's mining at 0.3, like 3 cents a kilowatt. And
What?
Yeah, he's mining at 3 cents a kilowatt.
Okay. Okay.
You're mining like,
so that same
you bought-
facility in Texas is pulling what, 14 cents a kilowatt?
Depends. You can get some pretty good contracts in Texas.
Interesting.
Like they're mining for, but you're mining like in Paraguay, they're mining for 3 cents a kilowatt on hydro. So ESG friendly. They've got secured contracts for like 3-4 years,
Interesting.
and that like they're literally using excess power. Like there's not any concern that they're going to be shut down anytime soon. And they're talking 10 to 20. They were talking 10 to 20% on a year on $22,000 Bitcoin. So think about, and they're looking at using the heat and capturing the heat from some of the dissipation of the miners in their refining process of antimony. So
you were saying this before. I do remember this.
Yeah. So they're pairing it with an additional system that it will also be revenue generating.
Jackie, one of our first conversations was circular economies. I recall us talking about that.
Yeah, and honestly, I mean, I'm so fortunate to like be friends with some miners and people I know like in real life and stuff like that. But Listen, if you've got money and you want to get into mining, there's a solution. There's a way
Yeah.
for you to get in. There's so many
Yeah.
different business models off of mining. I don't
Yeah.
even think people understand. I know people don't understand that yet.
Yeah.
You could rent from the miners, like that's your system that's mining, and you can have pools of people in it. I mean,
Yeah.
it's actually amazing to me that it's gone this long without being hyper regulated.
Yeah. It's
But
actually been a decade. Like,
it's been a minute.
that's
But
too funny.
yeah, I guess I'll
Your
leave it.
contacts in mining, Jackie, do you know if they're doing hydro, solar, or just normal grid?
Um, I'm not gonna say.
Okay, sweet, cool. Okay. The Rockefellers wouldn't like it if Jackie.
No,
That's all
honestly, to
right.
Aussie's point though, I think, and to Grant, going back to the whole circular economy thing, I'm for spiral economies. Go look them up, people. It's the next big thing. You heard it first from Jackie Roach. Not first from me. I didn't invent them, but
Yes.
I see everything is like pushing these circular economies. I'm like, I think
Yes.
spiral economies are better because they have this regenerative and like expansive
Mhm.
way to them, other than just like keeping something. Like anything that's in its own system is eventually going to disintegrate or degenerate over time, or
Mhm.
you think of like carbon copies, things like that.
Mm.
Anyway, yeah, I think out of mining there's just so many novel things coming from energy. But again,
Mhm.
energy is everything that we make money symbolize. So it's,
Yeah.
I mean, just switching to one thing from another, a lot of, I think I see that a lot in like the degen communities and probably the early crypto communities. It's just not this understanding of how many cogs in the wheel of the world exist, and we can't just like blow it all up and switch
Well,
to
and you
something
raise
else.
a killer point, and that might even be our transition to Coinbase going down or Base going down for a minute. And Jarrett made this comment in our private chat, and it was very intriguing to me. Real quick, the headline, Aussie, what's the headline here? Give us the headline.
The base blockchain, they basically stopped printing blocks for about 45 minutes, and no one 100% knows why, but they did fix it within 45
And it's
minutes.
based on
So
Optimum, isn't it? On
it uses the Optimism stack.
okay, okay, but its blockchain is its own base blockchain.
Yeah, it's still the base blockchain. It just uses the Optimism stack.
And so Jarrett says this comment, Jackie, that paralleled the sentiment you were kind of getting at. Like, if money represents this thing, it's like the fiat standard or Bitcoin or whatever it is. But we're really just exchanging one effigy for another effigy of just monetary value. And we're still denominating it in US dollars. So that's a big flaw. But Jarrett says, I feel, referring to the Coinbase's base thing going down, he said, it's like how I feel that once a project has its own token, it's basically dead. Do either of you, first off, do either of you agree with that sentiment of Jarrett's?
I disagree. I mean, I think it's possible, like blockchains have issues sometimes, and so if it went down, like they did build it pretty fast. So like hopefully if it happens again, then we might have another Solana on our hands. But
Yes.
uh otherwise they've been doing a lot of other things that I think are good. Once a project has its own token, is it basically dead? I'd say that's 50-50. It depends on what project, how the token's being used in the project. I've seen some projects where absolutely you need your own token. Go back to our discussion on flat coins
Yeah.
yesterday, or on
Sure.
Tuesday.
Tuesday. Yeah.
Yeah, our Tuesday show, and I made a total argument on why you need flat coins.
Yeah.
See my bit. You guys should see my business case document that I've drafted,
Yes.
because flat
He's
coins
making his
are
pitch to
worth it.
Coinbase. Brian Armstrong, you heard it here first. Aussie's got a pitch for a flat coin. He's coming at you, and we know you're not a permissionless, but we're still handing out a lost and
Where's
found
Brian
Where's Brian
Armstrong?
Armstrong posters. And Jackie, the too long didn't read theirs. Aussie made the argument that if you had to make a flat coin work, it's got to have a basket of assets behind it, and a large chunk of that basket of assets behind it does also need to be a stable coin. so that you have a baseline to come against. What's your thought there? You almost had a contrast. You almost had a
No, I
contrasting
was
thought.
just like, I have to like visualize things people explain to me. So
Okay.
that's why I
I do
kinda,
wish we had a graphic. Aussie, this should be in your PowerPoint.
I
Like,
need to watch the show because I mean, I remember the first time you guys brought up flat coins. I was like, oh wow, interesting. Actually, Aussie, could you maybe describe it a little bit right
yeah,
now?
unpack it again. Go for it.
Yeah, sure. Flat coins. Flat coins are basically a stable coin that's value increases with the rate of inflation. So essentially, it's a savings account that your interest is equal to the rate of inflation at all times.
That's cool.
And so, like once a month when CPI data comes out, the value of your flat coin increases with the value of with the change in CPI, so that your purchasing power is always maintained.
Well, and Jackie, it was actually an interesting conversation that was so technical. We got very little love on Twitter Spaces because it was a technical dialogue that I appreciated and I think you would appreciate deeply. But like, it did get into the weeds of like, well, how the F is this working? And to Jarrett, let me give Jarrett some credit, who's not here with us. He, you know, being a maxi, he posed a very valid question. Well, why not just do Bitcoin? You know, it's its own thing with its own value. And there was good reasons. Aussie made an interesting nuance because in my mind, I thought if I could buy a gallon of milk with my one stink coin, let's just call it hex coin, not whatever, but I got a little tile here. It's just a hex.
Tile
Let's say
coin.
tile coin. So this tile coin can buy me a gallon of milk today, and gallon of milk in USD is $1. If next year the gallon of milk is $1.10, I just crank up the value here. But Aussie made a valid point, and Jarrett made a valid counter, and that is who suddenly has the extra value? Where does the extra value come? You don't just turn a knob and go, well, now it's worth X. You know, you got to have either assets that are growing that are backing it, or you have to have a really solid argument, or, in Jarrett's argument, you're Bitcoin and you have your own value. And my argument was like, well, it shouldn't be traded on a DEX or a SEX. It shouldn't be traded in the market because the market would then determine the price of the tile coin in that case. So, Aussie, could you maybe take your learnings from last Tuesday and not unpack the whole 20-minute dialogue, but have you thought about it further? How would you describe how a flat coin grows in value?
I think the best way to explain it is that you use the increased yield from other assets. So having different baskets of goods to increase the value. So some of it might be treasury bond yields, which in current market could be beating inflation. And you also have a smaller basket of goods that might not be part of your primary reserve. This is something I learned while doing my research on compliance. You have a secondary basket which might have volatile goods that outperform inflation, but it's a smaller reserve compared to the overall value, and so it then tracks. So you could have Bitcoin and Ethereum in that volatile basket, but it allows you to maintain the stability of, if we're in a bear market, Bitcoin and ETH might go down, but you've got Bitcoin mining backing and other things keeping that, and yield from treasuries keeping the basket of goods properly balanced and backed.
Now, Jackie,
Go.
like I when he described this on Tuesday, I had like, wait, an obvious next question. But I was watching your eyes there a little bit. Did you have something dawn on you or a question hit you about that structure?
I feel like it's not worth saying because like the most random thing was going through my head. Like I was just thinking of people like stockpiling guns and like resources,
Yeah.
like to hedge against inflation. And
Yeah.
I mean it sounds like that with like a white collar on it.
Yeah. well, it could be. And my next thinking was, wait,
Which isn't bad. I'm not
No.
saying that's bad.
But mine was, wait, if and Jarrett did call this out again, rehashing some of this for this conversation because Jackie's new brain is here and I'm really glad for it. Jarrett was saying, well, why wouldn't you? What it sounds like is when you're backing something with assets like this, in order to maintain this value growth, you're really just operating like a mutual fund, or so it's not a coin, it's not a token, it's just an ETF, it's just a stock, it's just an asset that represents a basket of goods that you're hoping to meet or beat inflation. And I called out on the call, yeah, we have to remember that this is a token. This is a flat coin, and the goal was velocity. The goal was regular everyday exchange that's just beating the US dollar. And then it's like, well, how do you back that? Because the American system, both good and bad, got off the gold standard. Do we remember why we got off the gold standard? Well, the nihilists say in order just to manipulate and play money games. But the pragmatists of the day, the articles written of the day was the gold reserves can no longer support the velocity of transactions going on, and we have to decouple a dollar from assets because humanity's transaction volume can no longer be supported. And so then with that framework, Aussie, have you had new thoughts from that counter that we had? Or Jackie, do you have any feedback at all about my counter there? Or at least my question of like, wait, why a coin? If it's
I mean,
just
I guess
investment?
what's intriguing about it is it sounds like the basket of assets that you are presenting would be all stable coins.
It'd be stable coin. It'd be stable coins on one side, but it would also be Bitcoin, ETH, potentially real estate,
See, I guess
Bitcoin mining capacity
that's where like
as well.
the nuance starts to hit me, because Grant and I were talking yesterday about how, we were talking about the fractional reserve banking system. What? Go ahead, Aussie.
Oh no! Sorry, just Brian's comment. made
Jackie,
me
finish your
excited.
thought first. We'll get to Brian in
Go.
a second.
Go first.
Okay, well, we were talking about this and how, like, is it fair? Is it unfair? And it really does underpin everything, debt buying, and that's the system we have right now. So when you have something that doesn't is doing it different than that, how do these things run parallel and interplay? It's kind of like when we want to go to driverless cars, but half the people still want to drive their cars, and now you've got all of these things on the road, and there's two
Interesting.
sets of rules for these two sets of ways of doing these two different things. So yeah, that's where, I think it essentially comes down to, and I think that's really the question we're faced with decoupling from, 33 countries, I think, signed off, said they weren't going to support the US dollar or whatever, or use it anymore.
It's
So
non-reserve currency. Yeah.
yeah. So what happens to fractional reserve banking at this point?
Interesting. Let me read Brian's, and then my Aussie will hand you the mic on your reaction there. Brian says, flat coins, isn't it basically the equivalent of Tether profit sharing with their holders? And for, I know you guys get this, for viewers who might not understand what Brian is saying, there's transaction fees happening at volume with Tether to the tune of billions. And instead of just pocketing that, they reinvest it into maybe their cash holdings instead of paying. It's kind of like Berkshire Hathaway. Instead of paying out dividends to those who holding it, they just shove it into the value. So it's a value-based investment. Aussie, how was you reacting to what Brian said?
So, in essence, it is the same thing, but Tether's not going to do that. Tether's interest isn't there. And the thing that's interesting about Tether, they're a stable coin, and that's their sale. Could they enter this space? Yes, but they're rolling in billions of dollars anyways. They have no altruistic reason or other reason to do this. And the thing is that this is also a displacement of bank accounts. You could essentially tell people, hey, we're a new bank. We're going to pay, your savings account with us will beat all the high interest savings accounts almost always, and most bank accounts, because we're making sure that you keep up with inflation, and we're not charging you account fees.
Interesting. Well, go ahead, Jackie, please.
Well, and to add on to that, I think when I hear you speak about this, Aussie, what's different about, other like ICOs or things like that is it's almost like it's got like a very pragmatic undertone. Like, hey, we're not promising you like profits, like crazy astronomical things. We're just saying like this is a good, conservative move almost to just always be in a good place.
Well, and what I like about Brian's reframe is it solves the problem of the marketing perception. If I came with a stable coin or flat coin, if I came with a flat coin and had to explain baskets of goods and assets backed, it's like this weird, like, wait, why don't I just buy the Vanguard 500 index fund like I've been buying since 2008 and just stack that? Or in Jarrett's argument, why am I not just stacking sats in Bitcoin and call it a day? Because there is a transactional nature. So Jackie, what is it? When you stand on a soapbox, sorry, your soapbox about DAOs hit me and thought, wow, a flat coin launched as a DAO that its only imperative is transaction fees. This is our only asset backed is velocity equals transaction fees, and they're fractional. They compare to PayPal or something like that. Those go into a basket every quarter. We at minimum inject that into the value. So whether it's a burn mechanism or something to this effect to ensure that our bookkeeping shows we had this much money, we reinvested it, and yes, it's kind of profit sharing, but now we can just turn up the dial of the value of that thing. And then any assets that exceed it, we then as a DAO decide whether to put that into a kitty for future down quarters or to burn it or to distribute it. We could do whatever we want, but you could simplify this whole calculus of baskets of goods. Just get the CPI numbers and sit on that cash for a quarter, let it earn interest or sit on that money. I like Brian's thinking, man. What a simplified way of going about that. But Aussie, is there a conflict with that simplicity?
Yes, because you're talking about profit sharing. Profit sharing, you could have a month where your profits are way above inflation and some that are way below inflation. Your profit sharing means that it's an investment. You're investing, but a stable coin isn't a flat coin isn't an investment. It's a hedge against inflation. It's a savings account. And you could run the flat coin as a DAO in the future. Like once it's all established, you could decide on that secondary reserve fund, basically have votes on, hey, here's the excess, or should we rebalance? Maybe right now it's 50% ETH, 50% Bitcoin, and we've got so many terahashes of Bitcoin mining capacity backing this. Do we increase the proportion of ETH? Do we add Polygon as an additional piece at XY percentage, and we could have that run as a DAO? But profit sharing, it basically indicates that it's an investment because you're driving profit. Your profit could or could not hit inflation rates, and you're not really with your example of burning doesn't increase the value of a stable coin. A stable coin is pegged to the US dollar. So unless you're distributing more stable coins, which then means you have to increase your backing, is a whole you get into a whole mess of accounting there.
So that raises a question.
Jackie
sorry.
also
I'm
looked
sorry,
like she
Jackie,
had a
go
thought. So
No, you keep going for a minute because I can say this whenever.
I was just going to ask, so do flat coins have to stay at CPI, or can flat coins beat CPI?
No, flat coins, in their essence, are supposed to stay at CPI. So
that's a tough algorithm.
No, that's not a tough algorithm because it's all about just compounding interest.
No, what I mean is if I were to literally be put in charge of this and be like, Grant, well, it's one thing to see the CPI numbers, but it's another thing to go do my assets. Like you're in portfolio management. You're basically a mutual fund at this point, and you're in portfolio management full time. Like
that is the main piece of how a flat coin needs to be managed, is making sure that you're managing that portfolio. The nice thing is that you only rebalance once a month.
No, that's interesting. Jackie, what's your mic drop? Hit us with it.
Oh, it's not like a mic drop. I don't know. I really appreciate this conversation, and I feel like getting into crypto, people are exposed to so many things they wouldn't normally talk about or think about
Yes.
or know about. And this flat coin, it's just very exciting for me to, whether this actually ever happens or not, or we see one or not. It's nice to go through these like cognitive exercises of even just breaking like a CPI down or and I guess what kind of like tickled my brain about it was have you guys ever heard of like picks and shovel investing?
I've heard of picks and axes,
Yes.
like the
Yeah.
example from Think and Grow Rich, but go ahead.
Like, yeah, I mean, like Rick Edelman talks a lot about this. It's if you're not into crypto or digital assets, like you can take the Levi Strauss route. Like he went out to the gold rush and he wasn't going to get gold, but he was selling people picks and axes and shovels
Yes.
and jeans and things that they needed to do all of the gold mining. So
Yes.
this flat coin actually kind of reminds me some of that. Like we're not exactly chasing what the thing is, but all the stuff that makes these prices fluctuate or CPI fluctuate or whatever. Like, or you're taking like a step back. And I mean, people will invest in anything and not question the underpinnings of it or whatever. But this has like it's just very smart, I guess.
That leads to a question that's tangential a little bit, but it's something that I've been meaning to ask, and I might have gotten this from Aussie in the past. What we're talking about is financial literacy. And Jackie, you do a lot of like urban development work, or you touch a lot of it just through your church experience and a lot of that stuff and just what's going on with people. We've had a passion, your Belize project, different things like that you've been exposed to. Aussie, government work, same thing. I think the thing I like about the Not Crypto Bros, Jarrett included, is we've all touched a type of humanitarian development work. And I continuously come back that personal development, financial development, it's largely a vocab game. And that's kind of rich dad, poor dad's idea of financial literacy. The reason I continue to press into crypto, and if you watch my position in most of the Not Crypto Bro shows, I'm still on the fence if this is the best investment out there. I like it ideologically. I like it philosophically. But what I really like about it is it forces these dialogues from like, do I actually understand money? And so I guess that leads to a question. Do either of you remember, what is the earliest you can remember being educated financially by a person or a book or a piece of material? What's the earliest you can remember?
I'm so much older than Aussie, so my answer is going to be like so much more terrible. He's so young and you know so much.
My dad and I had conversations about stocks and the stock market probably when I was 12, 13.
Interesting. Jackie?
I mean, I was probably 30 when I was getting my MBA, 29, 30. And
there you go.
Like literally had to be in an MBA program to learn like, oh, this is how the world works. And
yeah.
And that was that was probably like my confronting moment. And that was before crypto, way before I got into crypto, where I was just like, whoa, like not everyone has access to the rules of the game. Like I didn't even know this. And I had a pretty big job at that point. I was doing newsprint trading and, I was in this and I didn't even know I was in it.
I like how you worded that just now. Not everyone has access, you didn't say, to the game. You said not everyone has access to the rules of the game. And, we talk about, you and I, Jackie, talked yesterday about real estate. And you said, man, that kind of sounds like the Federal Reserve. We were talking about real estate and how money works for real estate and borrowing. And you like,
well, if you watched It's a Wonderful Life, that was like George Bailey's whole thing. Like, oh, you think the bank has money, but it's going to Sam's house. And
Aussie, have you seen It's a Wonderful Life?
That was a very good Jimmy Stewart if you haven't.
I was just about to take a time out from the Not Crypto Bros to applaud your Jimmy Stewart. What? No, Aussie, what did you say? Have you seen It's a Wonderful Life?
I think I've watched some of it.
Literally, from a money perspective, go back and watch it. Because George Bailey, the premise that it opens with, he's about to throw himself off a bridge Christmas Eve because he can't put the money together. And it's literally, bank. It was a bank.
Yeah.
Yes.
Like a local bank.
But but that was about the era that these banking laws were evolving in such a way that it was really displacing people, so much so that It's a Wonderful Life is based on this premise that he's about to lose everything and he can't figure out how to put it together. And so, yeah, man, I mean, and he does have this monologue somewhere, like, it's all like, I couldn't even, I'm not even gonna try. You nailed it. That's so funny. I'm trying to think back. My
Well, 'cause
earliest
everybody in town, when they're talking about when they go to the bank and they're like, "What do you mean the bank doesn't have our money?" And they
Yes.
don't know that, like, we can lend 90% out and that we're in a debt-based system, and, like, they don't understand or know any of that. So, in which it begs the question, like, have we just grown to a point with the debt-based system that, like, we've all seen behind the veil at this point, and it's like, what does it even mean anymore when it's not, when we all know it's just, I don't know. I can't say too much. Stop.
You can say
Basically, I'll go to flat coin. Flat coins are essentially what banking was before the fractional banking system, because everything, your dollar is backed one for one within a reserve.
Well, and this is,
So
sorry, keep going.
no, so
Well, I mean, like, when,
essentially, it's bringing you back to that point.
Go,
Go,
Jackie.
Jackie.
well, like,
You're
when
biting
Grant
the
gets
bit.
on, like, I know Think and Grow Rich was a very big book in your life, and at one point it was something that meant something to me too. And the whole premise of Think and Grow Rich is, your thoughts become reality. And I guess that was another thing that, like, really hit me when I was getting my MBA. It was the first time I saw the, assets equal liabilities plus stockholder equity. And I was like, okay, assets and liabilities, that's easy. These are tangible material things. What the hell is stockholders equity, really? And then you start peeling back these layers of the onion. And I'm like, okay, so stockholders equity is just the thoughts of people speculating,
Yes,
make it, so,
literally.
and that became so big. I have a graph somewhere in my crazy days when I was learning all of this, where I was like, this is the whole world. Like, this is, and then I was like, how, and I guess that's my question, is like, we've almost gotten to a point where, like, the material things, the assets and liabilities, are seemingly less of the equation than
Yes.
the thoughts of whoever,
Yeah. Well, and so I remember when Marissa was finishing her business degree at Southeastern, she got to international business, and we were talking about currency trading and pips, and then we were talking about options. And she literally had that same reaction, Jackie, where she was like, wait, but this kind of doesn't make sense. First off, stocks are based on a company. And the value of the stock isn't really the value of the company. It's the value of the market perception and the borrowing. And it's like, yeah, and it's hoodoo, but so it's make believe. So the stocks, and so it started to land when I said, your perception that this is made up is accurate. And then you throw in stock options, and stock options are made up on the makeup. And so it's like two tiers of completely artificial. Now, they have some logics, very detailed logics on why this is actually worth something. But if you were to just say, Grant, give me the facts, you're right. The displacement from tangibles, and you could even rephrase that and say the displacement from reality, is that it's several layers of make-believe. The question is, no, not the question. We know that we're okay with that. If we weren't, we would literally not accept dollars. But we do. Go ahead. What was that thought?
Well, I don't know that we were okay with it. I mean, there are some people waking up that are not okay with it
Sure.
until you become okay with it, until you start to learn more about it. But I would also say, I think the interesting part about crypto and the metaverse and all of this digital stuff is that it's seemingly invisible, but digital infrastructures are now being tied to these digital currencies, and therefore it is making them tangible again, even though we still can't see any of it.
Well, go ahead, Aussie. Go ahead.
And I want to tie this into something we were talking about a little bit pre-show, was thinking about ETH and ETH, whether ETH is essentially a basket of all the dApps and all the projects that are being built on it.
Interesting. Yeah.
Because essentially none of these would exist without ETH,
Correct.
and all of them are at least somewhat dependent on holding ETH to conduct transactions.
Yes. The viability.
So-
like when Kathy Woods does her assessment of Ethereum, she goes the direction you're going. And she's going, hey, Bitcoin is what Bitcoin is. And it might even grow like this. And she makes a really good argument on institutional adoption. Jackie, I think this was just before you came on. The guys and I were sharing a chart, and I want to make sure you get it, because I've been wondering why ARK Investments and Kathy Woods, they're very smart people, how they conclude a conservative projection is like 150,000 per Bitcoin or something like this. But then they go on to do the same process of logic to what Aussie's saying is like, if we applied the analysis of TradFi to Ethereum, the flippening would happen because the amount of transactional volume is intense. This is what I'm getting at, Jackie. The point you made about like this, the NFT component, the non-fungible component, the digital architecture, that creates a certainty that this info product is certainly what it is. But you know what that does to me philosophically? The very gripe we have about the greenback, it's make-believe. And it's real because we say it's real. To me, NFTs validate that thinking. Because NFTs come along and say, well, I just made up this code that validated this thing as non-fungible. I just literally said it was non-fungible with my code. And my code can now validate it and just say, no, it's definitely not unduplicatable. That's all make-believe, but it reveals to me the main thing about currency, which puts me at a quandary. And I'll tell you the quandary. It's based on this idea that, wow, anything has value because we say tile make-believe coin. We decided to transact in that. And it has faith in the greenback or faith in the Bitcoin. So this puts me in a quandary, and that's this. This is why I can't be a maxi. Because at some point, we'll say anything has value. And go ahead. No, go ahead.
I mean, you have extensive background in like community building. Like I don't mean community, like actually like physical people putting an economic structure together so that they have some economic power with other, the world, whatever. And I mean, I think that's kind of if you really want to understand money, you have to start with trade. The only reason money exists is because we wanted to trade with each other. We wanted to, and it was getting difficult when we were like, well, 3 ounces of rosehip oil equals 15 loaves of bread, So, we started to tag a price to it. I mean, that's in my mind, that's the I know an oil trader, and he has a huge sign in his house, and it says, "Life is a trade." And, I mean, essentially that's what communication is. That's what we're trying to do. And, yeah, Brian, just to wrap this up, I don't know where I'm going because I started reading Brian's.
Oh, sorry.
No, it's okay.
Life's
I
a
always do
trade.
that. I like look down, but,
yeah.
Well, yeah.
No worries.
And I mean, I think that's kind of the funny point we're at is like, we're distributing so much, and we've seen all these tribes come out of crypto communities, like, and even back to Jared's point of like, well, once you have a token, it's dead. And it's like every tribe loves the idea phase. We're going to do this. Let's build the roadmap. We're having fun. And then it's like, okay, the token's available. And now it's like the real world. Right. So, but yeah, go address Brian.
So reading this real quick, this is exactly what I was thinking, Aussie, when I was thinking about the net value of ETH and the flippening. Raoul Paul is good on ETH. He says it's all to do with Metcalfe's law. This was my point. Every dApp accelerates ETH is operating like a social network. I mean, ETH philosophically and sociologically, I think is the bigger invention, if you will. And ETH is where Bitcoin was 4 years ago in terms of cycle, only already with much
greater adoption.
Oh, greater. Okay.
I think. I believe that's what it is. Bro adder adoption. I'm expecting that he's probably typing on his
Text
phone
to
right
type.
now.
Yeah. And his
Yeah.
and his
Broader.
Broader adoption.
Okay, there you go. You nailed it. Only with broader adoption. So this is why I believe I'm bullish in general on Bitcoin. I'm more bullish on real estate because of supply and demand. Because of demand. And Jackie, the chart I'm referring to with Kathy Woods it was basically their projected conservative, moderate, and bullish projections of demand for Bitcoin. And it was nearly all institutional, which was quite interesting. Ethereum, however, was institutional, but the DApp case of demand, i.e., the transactional nature, there's like a higher velocity around Ethereum. Go ahead. What's your thought?
Well, and I mean, Bitcoin is Bitcoin, right? It's just this like one thing. But with Ethereum, I mean, and I'll agree with you. Like in the institutional circles, I'm around 150 seems to be this like BTC is going to be 150. It's like kind of this thing. So if thoughts do become reality, those are the thoughts.
That's my price, and mine actually has to do with math.
Yeah.
I did a whole
What's
math.
that? No, I'm just kidding.
What's maths? Yeah, what's
Finish the
maths?
thought.
I've got maths for 100.
But to this point about
makes sense.
Ethereum, like we spend Ethereum, we use ETH to do all the things that we're doing. So in most people with Bitcoin, I mean, that was, I mean, I guess a year ago, people were still debating like, well, would you spend Bitcoin or would you hold Bitcoin? And once it gets locked up in institutions, I mean, my feeling is that it's going to go into cold storage. And then all the other money that exists is going to represent Bitcoin, but it won't be Bitcoin that's actually getting traded and moved and all that stuff. But
that's literally my argument against Jarrett. Thank you for validating my argument.
Well, I mean, yeah, to your point, Jackie, like I sit here and think like I do a dollar cost average every 2 weeks. And it hits Coinbase, and then it hits all my wallets, and it hits my cold storage wallets and leaves Coinbase. That's my on-ramp. And you're totally right. I always have this thing in my brain. It's like, oh, that's right. I've got to leave about 50 ETH in here for transactions.
Yeah.
I never once say this about Bitcoin.
Right.
Like Bitcoin goes to, and I'm a small potato. I'm not even a potato. I'm like a small twinkle in a potato's eye about like what I'm doing with Bitcoin. And my obvious option is that all just goes to cold storage and I'm hodling it. What, Aussie?
Just potato. The potato reference is just killing me.
So yeah, it like if you look at your own habits, I do that because that's the infrastructure. I don't do that because I'm small. I do that because of the infrastructure. And then you think about a BlackRock moving billions, and they're like, they have the same problem. Oh, let's leave 150,000 in ETH over here because we're gonna have to move some money. And so that itself has evidence that someone's gonna get transaction fees on that. And that is this velocity. Go ahead. What's your thought?
Well, and I also think this speaks to like, I don't expect Ethereum to ever be like worth $100,000 or $150,000.
I've got 80K. I've got 80K on ETH.
But I want to hear this. Go ahead. Yeah.
No, I think unless like, you know, and I haven't completely figured this out either. You know, you've got layer twos, and as interoperability increases, maybe that will solve kind of what I'm saying right now. I mean, maybe we won't be spending Ethereum or Ether, you know, maybe we'll actually be spending something else that runs on the network. You know, there's many more complex games to be played.
Well, and I'm wondering though, like, I mean, we didn't even get to the conversation on Solana hitting like an all-time low. I mean, but when I think about cross-chain compatibility, I was banging that symbol like 6 months ago, and I've begun recently to wonder why. Why not just build on ETH? Why do we need cross-chain compatibility? Are blockchains that niche that we need cross-chain compatibility?
Yes, if you for the velocity of money, like your whole argument on the velocity of money is why we need cross-chain compatibility. Because if you need to be able to move money from one chain to another, like if that aren't compatible, so like you can move money from Optimism to ETH fairly easily, for example. But if it's 10 steps for me to move money onto Solana, I'm not moving money onto Solana and then the amount of liquidity on Solana goes down. Therefore, the velocity of money on Solana goes down because there's no one bringing fresh capital to get that money circle going. And so cross-chain compatibility is all about the flow of money and ensuring that there's a velocity to that money by ensuring that there's always new capital coming in and going out.
Oh, I just see those chains dying. Like, that's what I'm getting at. What's your thought, Jackie?
I mean, I guess it's like the innovator in me. I think competition's really good at this moment. I hope it goes on as long as possible because I think there's, I'm for competition in markets. So I think the more blockchains we have, provided they can get funded, provided they can be distributed enough and get enough users. I mean, it's really the user adoption point for every blockchain that's really, stopping them from matching ETH. But, at the same time, I think ETH becomes, how does that become any different than Facebook? We didn't know which social network was going to be the winner. But how does it, and people already argue that the Ethereum Foundation is too centralized and,
Oh yeah. Well, I mean, I think we'll have, I don't think blockchain is immune to human nature. I think the market is what it is because of human nature, not because of any reason. Even the power controlling elites, I believe that itself, like Facebook, like Meta, like BlackRock, I believe that is a natural outflow of human nature. And so I agree. Like, I want competition. I want the party to last as long as possible. But then I feel inside of me the business opportunist in me switching gears and going, okay, yeah, but what will happen? And maybe there's a major buyout. I've been hoping that Amazon buys out Avalanche for quite some time. I think Avalanche is phenomenal, and I've had great experiences on that blockchain. But like, aside from like tech specific blockchains, which I think Cardano, to Cardano's credit, I think they've been trying to build Cardano based side chains that are nuanced for use case and utility.
Right.
Like, here's the driver's license blockchain. Here's the ZK proof. Like, those blockchains I think need to remain. But like these layer 0, layer 1s that, like, I don't know why from a business case, if I were a new business owner with a new seed of investment capital and someone were to ask me as a consultant or as that business owner, what will you build on? I'd be like, what the hell are you talking about? We're building on Ethereum. Like, it's literally got the most viability. Is it expensive? Guaranteed. Is it centralized? Definitely. But as a business person, as a philosopher and a sociologist, I'd be like, let's go gangbusters over here on Avalanche or Cardano or, whatever. But like, the business person in me would kind of be like, that's kind of risky. Like, what's going to happen?
And I think to back you up a little bit, Grant, like, to agree with you, I mean, for how much hype has always come out about Polygon. Oh, they're working with Disney. They're working with this one. They're working with that one. Like, where's Matic at? And
And I'm a fan.
And now
I'm a fan.
Yeah. And now, I mean, I can't remember exactly what's going on, but isn't Matic like getting phased out or?
Yeah, they have they're
transitioning to Poly.
Right.
And I think this was motivated because the protocol, their decision, I think, on this was actually, I do agree with this decision of, listen, please exchange your Matic because we can't do some of the dynamic NFTs on Matic like we could on Poly. But I'm with you. Like, I've been like, come on. Like, Poly to me is the most possible third chain that could really have. Like, it's like Bitcoin, Ethereum, Poly, Cardano. Like to me, if we just had those four, I would be okay with that level of diversity in the blockchain environment.
But I guess there's a question for both of you. Why, in your opinion, why did people even use it?
Cheaper. They're like, back when at the top of the bull market, ETH fees were ridiculous. Polygon used the security of ETH, had the interoperability with ETH, and it was a lot cheaper. And you could, I think there was some kind of opportunities where they're talking about certain things with the Polygon zero proof identity and all of that that's going on that could kind of increase interest in Polygon and in Matic. I think those are some of the big selling points for Matic, just how closely related they are to ETH, while also providing some kind of additional features. Whereas AVAX is maybe a little bit for I'd say like Polygon is ETH's baby cousin, or baby brother, and AVAX is like their second cousin.
Polygon's like ETH's wife, and AVAX is the mistress.
There you go. I mean, Polygon architecturally came on as a layer 2, but they've built a layer 0. They are their own layer 0. And borrowing the security of Ethereum was huge. And being interoperable is huge. And I guess that's kind of your point, Jack. You're like, interoperability is the future. And I do think like any blockchains that come out, I guess what I'm thinking is this: there's going to be a blockchain for every nuance of society, because there has to be a ledger. For if I want ZK proof identities, I need like a Sol token type standalone ledger, and it will require interoperability. But to me, that's when I say like build on Ethereum, that's what I'm talking about. I guess I'm assuming that interoperability will be so abstracted by then that it'll just be assumed that it hooks in. It won't be a selling point. It will be
maybe we're saying that interoperability, we're inherently speaking interoperable with Ethereum.
Yeah,
Ethereum is the internet now. I
agree with that.
I think I honestly, anyone who's trying to launch a layer 1 is a total idiot.
Go home now.
At this point, go home now. You're useless.
I don't disagree.
And if you're launching a layer 2, make sure you're targeting a niche with your layers.
You just used language that I think will happen. You just used language that really hit this home. Ethereum is the new internet. We had Ether cables, and then we had Ethernet, and then it just became the internet. And we had Wi-Fi, and we had Wi-Fi signal, and it just became the internet. I think you're right. I think Ethereum will ultimately become so abstracted we will just refer to, when we use that term, we're talking about the currency. We're not talking about the blockchain. And I think you're right. I think dApps will just be built, and there might be like a niche reason, but that's like me saying, I built an app. I don't have to articulate that I built it on the internet. Everyone knows that I assume that. And then I might refer to certain APIs. Well, we're pulling an API. Brian, the Solana champ. Visa is using Solana for cross-border payments. Just saying. Yeah, so maybe it's buying it as a steal right now, but I think I did misspeak earlier. Jared Austin said Solana hit a 2-year low in daily active users. And to me, that's more of a death knell than the lowest price in 2 years. But
Solana does have incredibly smart people.
It does.
Building it.
It does.
I mean, every blockchain does. I think the real death nail to Solana was that they were too smart for their own good. Like I don't know if you guys ever read the white paper. It was getting into like quantum money and like I have a friend who wrote a book on quantum money, and I mean, like I'm in it, man. Like I want to be in the fifth dimension with y'all, speaking telepathically and trading money on thoughts, and
Yeah, man.
But realistically, we move with everybody, the lowest among us, whatever that means to you, like they also are going to be brought in this wave. So I think Solana is just already in like 26. Their assumptions of how this, all works is like, it's good to hear that they're working with Visa though. It seems like they really compromise their ideals to do that.
But I'm going to disagree a little bit with what you just said.
I don't want to come on the show anymore.
Yeah. What are you saying, Austin?
Yeah, I know. I'm such a bully. Aussies just like
the Canadian bully. Go ahead. What do you got?
Yeah. I don't think, maybe they are really smart, but they also built a blockchain that isn't decentralized and is absolutely prone to DDoS attacks. So
how smart? Yeah.
Maybe their vision is in 2060, but their execution is in 20.
We're
30
actually
feet.
agreeing with each other because
I was just going to say that.
how many extremely smart people do you know they get a flat tire and they're like, ugh.
Don't know what to do.
Yeah.
Yeah.
This real world thing is happening, you know.
That is evidence of being too smart for your own good. It's being so smart that you built the future, but you forgot to build a bridge from the present. And honestly, it's not just Solana. I do believe, I will say, in the adoption bell curve, we are now long outside of the innovators realm. I believe we're well into the early adopters realm. And I'm not talking about retail. I'm literally talking, we got into a little bit of a discussion at one point that developers need to quit telling, they need to start speaking in the lingo of VCs, because VCs are the bridge. And every technological wave, there was the innovator wave and there was exceptions that proved the rule. There was these exceptional things who bootstrapped and they made a ton of money. But the bulk of people who really established a new beachhead of a new technology were those who bridged the communication that they could speak in VC's lingo, and VCs speak in viable business models. Not the tech. Don't sell me on the tech. Tell me now, when you just said Ethereum is the internet, it will, like that right there, that will sell a VC. But to tell me that Ethereum is a cross-chain blockchain that you hook into that has these nodes and then you do staking and it's like pause, time out, what? But if you can tell them, hey, it's literally the highway of the future internet. It's like, tell me more.
I don't think it has to be necessarily VCs. I do like crowdfunding in what blockchain. I'm not a fanboy. Good, Brian. No, I'm just kidding.
Yeah.
You know, it can be,
You
it can
better
still
not
be
be.
crowdfunding, but and it was on the Y Whales podcast that I heard that, you know, it was speak to the capabilities, like what does this actually do, but even to end users, and that's how they know what to expect. When I open this app and I start doing, what am I expecting to happen?
Yeah.
And don't get stuck in the technical. And I think for everybody, it's easy to, everybody wants to be smart, you know, everybody wants to be speaking the lingo and like rely on that. But if the thing's not doing a thing, then it has nowhere to go.
Yeah, man. And on that, we have plenty of places to go, which is why we should wrap up the show at almost 10 minutes after. Guys, any shout outs today? Who are you shouting out? Aussie, you have a final thought there? No, you
Shout out to all the Obsidian crew that I'm going to see probably starting tomorrow. Permissionless is going to be lit. Also, yeah, I've literally got to pack my bag. So shout out to packing suitcases.
All right.
Because
you got it. It's going to be lit. That okay, let's go. Jackie, what do you got? Any shout outs today?
I'm going to be like sensitive right now. I'm just going to shout out anyone who's like going through anything right now. I have some friends going through some really intense storms. Keep the faith, keep your heads up. This too shall pass. Go into the weekend expecting good things. Even from the challenges and trials and tribulations, good things come from it.
I dig that. And that also applies to people in crypto, because I think there's a lot of identity crises happening in crypto people, because is this just a bear? Is just us the winner? Everything I built, my content I've been creating, like what's my future? Do I stay at it or do I need to pivot? Like I think everyone everywhere is having some trials and tribulations. So that also
real quick.
Yo.
Grant was on the Alpha Drop. Rachel Buchanan and I have a podcast, the Alpha Drop, came out yesterday. And I like, Grant, you said in there, you know, don't get your identity wrapped up in the things that you're doing. And we always have to, I think, like safeguard against that, no matter what circle we find ourselves in.
Yeah, I like that. My shout out is to everyone at Permissionless who expects big things and they're just going to see me coasting. Like, I feel bad already on my pace. I am looking forward to Sick Ass Barbecue. That's a big one I'm looking forward to. And then there are some good talks. Aussie, you were pointing out some really good talks. I was flipping through some of that, and I was like, oh, you know what? That would be cool, just to grab a drink and actually sit through a conference. I didn't pay for NFT NYC. I just paid for my plane ticket and my hotel room. And we talked our way in, so I really didn't take advantage of the conference. But I do look forward to some of that. But in all honesty, shout out to my IRL team, Amber and Jessica, who had a phenomenal week. We were actually looking very lean on, props to them. We were looking really lean on sales, believe it or not. Transparently, not everyone gets to see behind the screen like that. And the girls just did not panic. They just did business as normal. They closed some deals. We served a lot of clients. So like, I don't think the IRL people working the JOBs get enough love. It's not all hype, it's grind. And so to them, but people like them, to the grinders out there, you make the world go round, people. We just talk about it, but y'all go do it. So shout out to the doers out there. Guys, you can pick us up, guys and gals, you can pick us up Tuesday, Twitter Spaces, Fridays, here at 10 a.m., Tuesdays, 3:30 p.m. on Twitter Spaces. Find us there. You can find Jackie at Wellness or on LinkedIn. She's got a great presence there. You can find Aussie Decentralized News. You can find me anywhere you type in Grant Sparks, and have a phenomenal weekend. Take care.